together. So I think everything is fixed now. So I'm very happy to welcome you to this session, Innovative Solutions for Scaling Up Investment Toward Nature Positive Outcome. My name is Romy Goedeke. I'm the Associate Lead of UNEP-FI's Nature team. I'm also your moderator for this session. In the next hour, we're going to hear from incredible experts. Before I make my introductory remarks and introduce them to you, I would like to start with a land recognition. So I'd like to begin by acknowledging that the land on which we have gathered on for COP15 is the traditional and unceded territory of the Gan-Yon-Gahake Nation. I honor and respect the traditional custodians of the land and waters on which we meet. So last night was another all-nighter for the negotiators, and I think they didn't have time to change this room setup to something more suitable for a panel discussion, and that was mostly around resource mobilization, which is a hot topic. So today we'll discuss on how to scale up investment in nature. UNEP-FI's State of Finance for Nature report that was launched just before COP15 started reveals that nature-based solutions are significantly underfunded. And if we want to halt biodiversity loss, achieve the goals of the Paris Climate Agreement, and also achieve land neutrality by 2030, those flows need to double by 2030, and then they need to triple by 2050. So closing the funding gap is almost like making a cocktail. You need ingredients. Some ingredients you need a little of, other ingredients you need a lot of. So we have financial sector actors, communities, NGOs, and they all play their unique role. And I'm very happy that in this discussion that we have that perfect blend of people coming together. So I'd like to introduce the panelists to you. So first of all, Marten Tollenaar, and I'm glad that I'm also Dutch so that I don't struggle pronouncing that name, is Impact and ESG Director at Cell Ventures. Then we have at the back, in a matching green outfit, Alexandra Albin, who is the head of Division Equity and Regional Funds for Sub-Saharan Africa and Latin America at KfW. We have Frank Hawkins, who is a former colleague and friend and now is a policy advisor at IUCN, stationed in Madagascar. We have Nabil Kadri, who is the head environment and Amazon fund for BNDES, the Brazilian Development Bank. And then last and not least, as people tend to say, we have Gregory Watson, who is principal specialist biodiversity and natural capital at the Natural Capital Lab at the InterAmerican Development Bank. In this session, we have prepared for 2 rounds. So first a round on how the different organizations are working on upscaling investment in nature, and then a second round in which we'll be diving into opportunities and challenges that they see. We have space for questions, hopefully. So if you have a question, we have no shortage of mics to ask questions in. So please come forward and then ask your question. We have about 60 minutes for this session in total. So before we dive into the topic of finance, I want to discuss what is nature positive. And that's a question, obviously, for IUCN. So I want to ask you, what is nature positive and how does IUCN work to create a North Star or definition for others to measure impact? Over to you, Frank.
Thank you very much, Romy, and thank you for the opportunity to sit in front of such a distinguished panel and in front of a very diverse and interested set of agencies. I've been enormously impressed while I've been here at the interest that's being shown to the question of nature positive by the finance sector. It's one of the high points of the whole proceedings for me. So it's obviously really important that we understand what nature positive actually consists of. I like to think of nature positive as the sum of all the contributions that we need to make in order to bend the curve towards eliminating nature loss and contributing to nature, bending the curve to nature positive. And there are lots and lots and lots of contributions that need to be made from lots of different places. And up to this point, we've been relying largely on the contributions of civil society and governments to do that, when it's very obvious that in order to achieve the bending the curve targets that we have, you have to involve places where the money is spent, the private sector, and in particular the finance sector. So what we need to be able to do is to help those sectors of society who want to contribute to identify what those contributions consist of. And those contributions to bending the curve need to be discrete, measurable, and verifiable. They need to be the kinds of things that individual institutions can deliver. They need to be broken down in such a way that they are achievable, but also that you can add them up so that the cumulative impact of all of them actually delivers the goal you want. From the perspective of IUCN, you need to be able to link these contributions to how it is that they impact living nature. Now, there's been a lot of focus on the benefits that nature provides to people, ecosystem services, for instance, and those are absolutely crucial to ensure that humanity is able to survive on the planet. But in order to get the system to work, you have to invest in the infrastructure. And we've been catastrophically bad at investing in infrastructure. The infrastructure of nature is collapsing. The good thing about this, if you can say that there is a good thing about it, is that we know pretty precisely why it's collapsing. We know what the reasons for that collapse is, how it's impacting the underlying biodiversity components, and therefore we can tell what it is that we need to do about it. So the key combination of these things, the key combination of the fact that we know what's causing the natural infrastructure to collapse, and also that we need to find a way for individual institutions to contribute to the repair of that infrastructure, is that we need to focus, we need to drill down to identify how it is that those contributions can be defined and then delivered. One of the ways that we can do this is to look at the production systems that are contributing to the loss of biodiversity. And because in general, to take an example, agriculture is the thing which is driving a great deal of biodiversity loss, identifying what production system of what commodity in what jurisdiction is a great place to start. If you can do that, and you can tell what that individual impact is at that site, you can put a number on it. This is where we've worked with a lot of partners and contributors to define a metric that can tell you the opportunity you have specifically to reduce species extinction risk in that particular spot around the world. And you can then say, this is the number, this is the value of extinction risk you can produce that will deliver that in that particular polygon, that place where a commodity is being produced. You therefore know what you need to do about it. You need to reduce, for instance, the impact of invasive species, the level of hunting, the loss of habitat in that particular place. And that can be one of your contributions. That's a verifiable, identifiable, deliverable piece of the big puzzle. You can decide how across the range of places you have an impact, which bits of it are the most important ones to deliver. And you tackle those ones first. So that could be applied also to infrastructure. If you're building bridges or dams or whatever else it might be, those are also things you can nail down, that particular contribution that you can make to the big global goals. From a finance perspective, the interesting aspect of this is you can then ask companies that have that possibility, that they can say, I want to be able to contribute to nature positive from a commodity-based perspective. The finance sector can ask that company, have you done that? Have you identified where it is that contribution is that you can make? Have you prioritized the set of interactions you can make? Have you identified targets that you can deliver, perhaps under the TNFD or SBTN framework? Have you started to plan how you'll do that? Have you measured what you might be able to achieve in reducing the pressures on biodiversity? And ultimately, did you deliver that outcome? Did you deliver that small piece of what it is that the big target needs you to do? So there's two pieces, the finance and the commodity impacts, if you like, that fit together, that allow you to be able to deliver that net positive outcome. Thank you.
Thank you so much, Frank. So it's very much in line with what the TNFD is also preaching about: location, 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 I would say. So I want to turn to Marta Tollenaar with a question about, what is SIL Ventures and what do you do to create a nature positive future?
Yeah, thanks, Romy. And thanks, Frank, for that introduction. I think there's a lot of linkages to be made. So SIL Ventures, I work for SIL Ventures. It's the asset manager of the N Green Fund. And the N Green Fund is an investment fund in tropical agricultural commodities. So the first link with Frank's story. We invest in tropical agriculture with the aim to de-link the production process, including the value chain, from deforestation. That is the main goal. The way we do that is indeed, like the TNFD illustrates as well, is to look first at those countries with tropical forest. Tropical forest is our focus, and where that tropical forest is under threat from agricultural commodity expansion, which is most of the tropical forest in the world. In those countries and those jurisdictions, we look at the sectors that drive deforestation. And in those sectors, we look at those companies that can help shift the needle, bend the curve, that are willing to make a difference in their production process to become the norm in terms of deforestation-free, inclusive production. The way we do that is through a debt investment instrument. So we're a debt provider. We lend to these companies. We typically seek medium to very large companies to help them improve their supply chains and help them de-link their production process from deforestation. And how we do that is we assess the impact that this particular investment can have on the landscape. So we have a very strong landscape focus, including supply chains, including conservation areas in that same landscape. We look at what is the potential impact in positive terms that the investment can have. And we process the data that we gather in our due diligence in what we call a landscape protection plan, which lays out exactly what we want to do with the company over the course of the loan tenor. We have quite long loan tenors, 10, 12 years, which is very convenient if you want to transition together with a company. So over the course of that loan tenor, the company works towards time-bound outcomes, so a set of milestones, deliverables that are monitored, externally verified throughout that 10-year loan tenor. So having said that, and coming back to the question of Romy, we're a relatively small fund. We have about 140 assets under management currently, 7 investments in our portfolio. How do we help this get to scale, right? I think there's 2 main considerations for us there. Firstly, every investment that we make, we want to align with what we call a transformational change concept, meaning we need this investment to be able to make a mark not only on their own processes, but on the sector as a whole. And this can be because the investment has a very large market share, right, and can therefore pull the rest of the market along, or because an investment can make such a replicable blueprint that it can take the market along and can be replicated across the jurisdiction and push the market towards deforestation-free in that sense. We also include those transformational change objectives in the plan that we make with those investments. So in our action plan, we include transparency, one, to make sure that they are actually replicable, but also active dissemination of their learnings in industry platforms, in certification bodies. So we really want that company to take an active leadership position in the sector. And thirdly, we're fundraising. So we are trying to expand our fund. We're quite ambitious with what we want to do because part of our thesis is that we are commercially viable, we're scalable, and this can be the norm in agricultural investment, right? It can be deforestation-free and commercial. That is what we want to demonstrate. So all the systems that we built, the screening processes that we're learning so much about these days, are built to manage a portfolio at scale. So I hope that answers your question.
Thank you so much, Martins. So from small to a little bit bigger with Alexandra, I want to ask you what role you think that development banks that as KfW play in creating a meaningful shift from nature negative towards nature positive.
Thank you very much, Mart. Romy.
Marty
First of
did a
all,
great job too.
Thank you. Thank you very much for inviting me here. It's really a great honor. And it's so good to have the possibility to speak directly after Marta, because I think what you are representing is exactly what KfW is investing in. So, I mean, you're asking me for what can development banks do to achieve a meaningful shift. This is, of course, a very big task, but I think there are really ways to support this meaningful shift. And for KfW as a bilateral public development bank, it's very interesting because we have a double role. Since the funds we receive from our government, from the German government, can be used either to engage with the public sector on a bilateral basis, or we can also engage with private actors. And I think when it comes to the public sector, what we aim to do with so-called policy-based lending is that we have a say, or that we work together with partner governments to influence their national framework when it comes, for example, to structural reforms in the environmental policy space. And then we agree steps that have to be followed, and only then KfW, with funds from the German government, can pay out this money into the budgets of the governments directly. By doing so, helping to achieve these structural reforms. And I said, well, this is more the public side. But then when it comes to the private sector, I think development banks like KfW can really play a catalytic role as anchor investors to engage with private investors and attract private capital into areas where they would normally not invest, like biodiversity, like agri-finance, and in regions like sub-Saharan Africa or very poor Asian countries, again, that would not be attractive for the private sector, where they need structures that are economically attractive for the private sector and have nature positive effects at the same time. And of course, what I'm speaking about now are exactly impact funds like Marty is representing here. And the good thing is when we achieve to attracting private capital to these funds, we align the private capital with public capital. And normally, at least we at KfW really think that our ESG standards are very, very high. And then we link the private capital to these very high standards. Yeah, and a third way of really supporting this shift towards nature positive investments is that we have access to grant funds as well that we can use for technical assistance. And normally what we do in impact funds when we start investing into impact funds is that we attach a so-called technical assistance facility to these funds to really be able to work with the fund manager, perhaps to even establish a better ESG framework within the fund, to work with partner financial institution if the fund does hand out loans to the financial sector, really to work hands-on. I mean, not us, but people, experts that deal with technical assistance, to work with investment officers, to work with ESG officers in the banks, to take away the fear, to work with smallholders or yeah, in areas like biodiversity financing that is so little known to private banks and private investors, or even support portfolio companies directly to increase awareness about nature positive investments. Thank you.
Thank you, Alexandra. And I think what I found very interesting in what you said is take away the fear. And I think in the plenary this morning, also the speaker from City spoke about how his team, with about 30 people, is responsible for creating change across the organization. So I think that's a key asset. So I want to come to you, Nabil, basically with the same question and see how different or how similar that is for you at the Brazilian Development Bank.
Thank you, Rami. Are you? It's okay? Yes, the sound. Very nice to speak just after Alexandra, because we always say that we are almost brothers, KfW and BNDES. BNDES is the Brazilian Development Bank. We are a 70-year-old national development bank, and we have many, many partnerships with KfW, including the Amazon Fund. KfW is the second biggest donor of the Amazon Fund, and it's very similar the way that we look to the agenda, but I think we have some differences that it's very related to the different kind of development of both countries. When we talk about BNDES and the role of BNDES in Brazil, Brazil is a very diverse country, very, very diverse country, because of the territory, because of the biomes, the culture, and we have all this richness of diversity in our country. But in the other hand, we are a very unequal place. We have inequalities in all spectrums that you can imagine: in income, territory, gender, race. All the things are related to inequality. So what we think when we are working on a long-term strategy and supporting the long-term strategy of the Brazilian country is how to look to these two hands and put one near the other to find the solutions. So we think that only developing and working with this potential of the diversity and biodiversity, we can find the solutions for the end of inequality and poverty in the country. So that's why we put all the time the diversity, the green finance, the climate finance in the center of all our strategies, because we believe that these agendas can be the promotion, or can promote the solutions to solve our problems in inequality and poverty. So that's why we've been working, developing financial solutions for many, many years. We've been working, I said today, we were one of the founders of UNEP-FI in 92. BNDES is one of the founders of UNEP-FI in 92. And since then, we are always trying to innovate, like the Amazon Fund is a good example, a 15-year-old fund that are related to forest, to conservation, to avoid deforestation in the Amazon region. But not only, we are working a lot developing, for example, linked loans related to any kind of projects, setting some KPIs for climate or biodiversity that these companies need to achieve to receive, for example, a decrease in the interest rate, or if not achieving, an increase in this interest rate. We are trying to develop more this kind of financial solutions, the linked loans, linked to KPIs for sustainable issues. Another thing is how to mobilize resources from the private, as Alexander said, using the public resources as a guideline, as a sign, a highlight on what we need to invest more. So we are working with two different instruments: match fund, and it is a very interesting way. We began in large scale during COVID for health agenda, and then we replicate it for the cultural and heritage agenda and for the forest agenda, and it's a very big success. All the goals that we set for fundraising or mobilizing resources for all these agendas using one-on-one, like we put $1 and the partners another $1, we achieve all the goals in half a time. It's a very good example of mobilizing resources using public money. And the second one is the blended finance instruments. In the second round, I will talk a bit more on it, but I think we have some lessons learned on these instruments on the last years, and we are trying to put new improvements and new solutions on the table to develop the forest and biome agenda in Brazil.
Thank you so much, Nabil. And I think it's nice to see how you try to combine social and environmental aspects, because I think what we see often, what is bad for nature is bad for people. So you could turn that around and say, you know, what's good for nature is also good for people. So I want to turn to you, Greg, and for some reason you're the last one in the list each time, but it's nothing to say about you. So at the Inter-American Development Bank, you work on nature as an asset. And I find it very interesting because I have a background in conservation. And one of the first things I learned is nature is not an asset class. So explain to me, what does that mean?
Sure, thanks so much. And I guess for us at the bank, starting in about 2018, one of the things that we wanted to do was start to make visible the economic and social value of nature and serve a bit as a Rosetta Stone. And this was around the time of Sharm el-Sheikh, so it was a good analogy to translate that in the scientific and the technical data into economic language, into financial language that's easily accessible to CEOs, to ministries of finance, and to bring that interplay between ministries of finance, ministries of environment, and also between public and private sector. And so partially what that means is making these value cases, and then that allows us to create different financial products around that, and it creates demand in our countries. And so, I'll kind of go in concretely into different areas and that allows us to do. One is, I think, in order to scale finance from the point of view of a multilateral bank like ourselves, it's really about mainstreaming, and it's about mainstreaming natural capital and biodiversity across our entire operations. And that's both from our earliest stages of our country strategies, where we've started actually looking at country priorities and saying, okay, these are your 9 priorities. How is nature supportive to those? And that allows the countries to then demand lending and guarantees and other operations where nature is a key component of an infrastructure project or of a social project, and actually to map NDCs, biodiversity strategies, infrastructure strategies, social strategies, and find those win-win-wins. Also, that means working on mainstreaming within countries and supporting that linkage across different ministries. And then if we get into specific kinds of products at the largest scale, last year we announced an Amazon program with $600 million, which is looking at encouraging private investment at a territorial approach. This is across the entire Amazon biome, looking at bioeconomy, but also looking at sustainable cities, looking at health issues, and everything from supporting venture capital investment, supporting national development banks and creating new lending lines for this kind of work, creating technology platforms that actually link investors to projects, because we know that's one of the big challenges is that, even myself, when I've been looking to create these products, I call all of my friends, many of whom are in this room, and say, who do you know that's doing an agroforestry project that has nature positive in Peru? And, I try to make a map. But if we can actually have some centralized databases, it actually makes it easier for all of us who are looking for those projects. So that kind of work as well. And I could go on, but that's kind of part of this territorial approach. Then it's also looking at our instruments and using them in new ways. And so you had mentioned policy-based loans, and we have some policy-based loans where there's key components of policy changes around biodiversity and natural capital, but also policy-based guarantees. And so we've started this year, we're the first MDB to use the policy-based guarantee to support debt for nature swaps, and we've approved 2 of these. One in Barbados, where our policy-based guarantee both creates a series of policy conditions that the country must meet around marine protection, but it also spun out 100% of the savings from the issuance of a new blue bond. It allowed them to buy back some debt, and that 100% of the savings went to a new conservation trust fund for a new marine protected area. And so, we're doing that again, and we have huge demand for this kind of product, and it's a new use of an instrument. And then looking at other kinds of bonds, IDB Invest yesterday actually just launched a blue bond of $60 million with Canada, with FinDev. And actually one of the really interesting things is that one of the KPIs of that bond is that there must be a TNFD analysis underlying the different actors within that bond. And so it's a really interesting link to what's happening with the market in TNFD. And we also supported Uruguay with their recent bond, which has a step up and a step down based on results. And some of those are climate, but there's also results around biodiversity and natural capital. And then getting kind of more into the weeds of kind of supporting innovation, we've been really interested in supporting venture capital. Our IDB Labs created a recent $60 million VC fund to support entrepreneurs in this space, and then also doing direct support for things like the Intrinsic Exchange, which is actually looking at creating natural asset companies that can trade the value of nature on the New York Stock Exchange. And it gets very complicated and technical, so I'm not going to go into all the details right now. But the underlying asset stays with the owner, and so actually the indigenous populations, the local communities, can reap the value of the natural capital that they are protecting. And then also looking at things like supporting tokenization and new kinds of grids that could allow us to do biodiversity credits and offset and habitat banking. So, from all the different layers, we're trying to really integrate across all of our products this kind of approach, so that we're supporting our countries and our clients with a nature positive approach.
Thanks so much, Greg. So this is the end of our first round, and I want to allow, if there are questions from the audience, for those to come in. Also, if you want to add to the discussion, I think we're a fairly small group, and I know everyone here is an incredible expert. So if there's anything, you can simply raise your hand and I'll allow you to speak. If that's not the case, I would want to go. Oh.
Sorry, I'm sitting directly behind you, so you can't actually see my hand, but thank you very much over there for pointing me out. My name is Sean Nazarelli. I come from the Biofund Conservation Trust Fund in Mozambique. And I wanted to ask a question particularly. You're the third or fourth person I've heard talking, Met, about we're trying to stimulate nature-positive investments, but we're working on loan basis. Now, and I don't know your particular policy on this, but when I start asking questions about it, I often get, but we're working with local financial institutions so that we don't distort the financial markets in these places. Now, Mozambique in the moment, our prime rate is 22.6%. If you're going to work with the local institutions and try to, even if you're providing capital, et cetera, if you're going to work on those percentages, it's not viable for most nature-based businesses, which requires several years of investment and enrichment before they start getting any return back at all. How do we deal with this in order to make places like Mozambique an attractive place to get capital to invest in business? Because there are people ready to invest. There are people on the ground with nature-positive businesses, but they're at tiny scale because they don't have access to capital. How do we solve that problem?
Great, thank you for your question. And I think that's a question to Greg, maybe firstly, but also in part, I would say to Marta, because I think Sil Ventures takes a much longer time horizon, right?
Yeah, I mean, I could speak to experiences in our region, not necessarily in
Yeah,
Madagascar.
I see that.
But what we've done is we've had projects that actually have had a long grace period at the beginning, that have, for forestry projects that have had maybe a 3 or 4 year grace period using concessional resources where the loan would actually kick in later. We had a project actually with the Forest Investment Program in Brazil with a Macaúba silvipastoral system where it's an equity project, but it's the equity actually it starts as a grant but converts into equity over time. And we actually do a lot of interesting work using convertible products, and so simple agreements for future equity or products that are basically start out as some sort of a grant finance, and then if the business is successful, it converts. And so it's one way to tackle that problem. The other is that through some of these equity funds that I was talking about that our IDB lab does, these are specifically designed to go in at the earliest stages. And so, we have a Regenerate accelerator, which is targeted at the Amazon, which is looking at actually filling that gap where a business might need $200,000. It's already gone past proof of concept. It's trying to go to scale, and it's using these convertible instruments.
Thank you, Greg. And I realize it was a bit of a difficult one for you, as you're not the InterAmerican Development Bank. Thank you, sorry.
Yeah, thanks for that question. Just to answer from what NGreen does, so we recently acquired funding from CAFI, the Central African Finance Initiative, to both provide loans through the NGreen Fund in the way that I explained previously. We have a ticket size of starting at about 5 million, so that would be quite high still for the projects that you're looking at. But part of that money can be used as a capacity development facility, so meaning much smaller amounts that can be used for businesses that are starting or growing, but do want to show that commitment to acquire a larger investment after an X amount of years. So that's something that we're now trying in Central Africa. Mozambique is not part of that scope, but I do hope that there's more initiatives like this that will help companies, get to that point where investors can come in and really help scale their nature positive solutions. If that's an answer to your question.
Great. It's always the same. Once one person asks a question, everybody wants to ask a question. So I think one more here, and then we'll probably go back to the script.
Can you hear me all right? My name is Dave Oswald. I'm from DE Design and Environment. So it's a private sector company that designs environmental information systems, primarily for MEA reporting. So one of the common themes that I was curious about amongst the panelists was what tools and systems do you use for managing the information that you need to have for the ongoing monitoring of biodiversity and ecosystem services, which essentially is the core asset that you're looking to protect and then ultimately finance, especially when you're looking to scale up?
Great. And that's a question. Is it addressed maybe to Nabil or Alexandra? You... Frank wants to answer.
Yeah, thanks for the question. I can't answer to maybe the financial angle here, but I think the issue of how it is that flows of finance influence the health of the underlying infrastructure for nature is incredibly important. So in IUCN, our major asset, if you like, is a very wide-ranging set of data on how it is that biodiversity is distributed around the world and what things affect it in terms of the impact drivers that are changing its status. So what we are trying to do through a range of different approaches, for instance, through the integrated biodiversity assessment tool, is to allow financial institutions to understand how flows of money can change the status of the infrastructure, the natural infrastructure that we all depend on. And there's lots and lots of ways, specific ways in which particular applications can be dealt with through those mechanisms. I'd be delighted to talk to you more about that if that's appropriate afterwards.
Super, thank you so much. I want to come back to you, Nabil, with a question. You spoke about, among others, the Amazon Fund that you have and some of the lessons and challenges that you have been experienced at the Brazilian Development Bank. Could you explore that question a little bit?
Yes. I will highlight again the concept that I said, that for us, the sustainable use of biodiversity is a key way to find solutions for our development. And this is very interesting because our biomes are really, really diverse, with many products that can be processed or develop more knowledge on the use of it for the health system, for the food, superfoods, and things like this. So that's why we really believe that we can make it more in the center of any kind of development solution in the country. So we are working a lot, developing a framework, internal framework on how to support these initiatives. We did it a bit formally, like a white paper to say what is a biodiversity investment or not for us. But we try to translate it, for example, on our support to SDGs. As we know, most all countries that are part of Paris Agreement and part of the CBD are signers of SDGs goals. And SDG number 15 and number 14 is really related to biodiversity. And we developed a open source methodology to tag all our initiatives in the 17 SDGs. This is all open in our website. We can find all the disbursements and all the projects that the bank support since 2015 till now, tagged one by one. So there it's very simple to find these projects, the positive ones, that we supported in each SDG, and in this case, the 14th and the 15th are the ones most related to the agenda. So we are working a lot on developing the frameworks in a very transparent and open source way in all our website, and then we try to use it. It's very interesting what Greg said, because is one thing that we are doing and it's working really well. Sometimes we think we need to create new things or new lines or new programs, but sometimes we can change just one or two things in things that are already running, just to highlight some special thing on biodiversity or climate. I will give an example. We have a very important program to select startups and accelerate it. We call BNDES Garagem. Is the program that we use to make this acceleration of startups. And for the first time, we highlight that we would like to select startups on biodiversity and forest bioeconomy. So we didn't change anything. We did the garage, we did the selection, but we highlighted there that we would like to support some startups on this issue. So the resources were the same, the people working were the same. The only thing that we changed is to put the priority on it. This is one thing, and the other thing is related to the again to the match fund and to the blended finance, because it was a really big surprise. Because we have some non-refundable funds. BNDES have some non-refundable funds that we use from our profit. Each year we segregate a parcel of our profit to use it in non-refundable funds. And we use just a small portion of it to biodiversity and forest bioeconomy, trying to leverage and trying to mobilize the resources from the private companies, not only private companies, but other banks and other institutions. And why is it a surprise for us? Because as I said, once we launched these initiatives on biodiversity and on forest bioeconomy, we really thought that we would fundraise a certain amount, and we knew that people are interested in this agenda. But once we put it to run, we saw that many people were just waiting for this kind of solutions. Some institution to say, come and show what you think it's a good modeling. On blended finance is interesting because what we didn't said, oh, this is the model, so come with this model. No, we did it open. Come and show the modelings that you have. We received proposals from big retailer companies. We receive proposals from assets. We receive proposals from NGOs, and all different, all blending and doing hybrid instruments in a very innovative way. So what are the lessons learned on it? Make it simple and make it feasible for the beneficiaries to propose innovative things. Don't do the work saying, I want this. Ask what is needed, and then you will receive the proposals. It's, it's a bit on what we are learning for the last years working with forested bioeconomy or biodiversity projects.
Thank you so much, Nabil. And it also reminds me that something we often hear is, we'll start working on nature once there is a GBF or once there is a TNFD, but there's no reason to wait. You can literally start tomorrow. So, Alexandra, KfW is the biggest development bank. Investing in nature is often not reaching scale. I see it here as well. Example projects that I've heard of before are being mentioned quite often. How can KfW help upskill investment in nature?
Yeah, thank you very much for this question, and perhaps to give it a better framework, let me spell out some figures. I mean, I learned that more than 700 billions are needed on an annual basis, and only or less than 150 billions are spent so far on conservation of biodiversity. And then our Chancellor, Olaf Scholz, in Sharm el-Sheikh, promised to raise investments, German investments in biodiversity to 1.5 billion by 2025. Now imagine you would need 400 donors that allocate the same amount as Germany to biodiversity, but there are not 400 countries on Earth. So public money is by far not enough to reach the targets of the global biodiversity framework. And then, well, what can public development banks like KfW do? I think the best we can do is really use public funding in a very strategical manner to mobilize private investments and de-risk private investments through this public capital. And I think this is really very innovative, because you could think, wow, isn't that state aid? Or why would a bank use public funds to de-risk private investors? But I think this is exactly what needs to be done. And an example I would like to share with you is the Eco Business Fund. This is a fund that is really dedicated to finance biodiversity, to finance sustainable production practices for SMEs. And what we did as KfW, we selected a really good and experienced fund manager, a private one, which is Finance in Motion. It happens to be a German fund manager, but we work with many fund managers around the world. And we set up a blended fund structure with 3 tranches of equity. And it always starts with a junior tranche or a first loss tranche. And this first loss tranche really has the aim to de-risk the more senior tranches and to absorb losses if there are any in the portfolio. And then above the first loss tranche, there's a mezzanine tranche where normally DFIs can invest. And above that, a proper senior equity tranche where we have investors like AXA, like Deutsche Bank, even sometimes like other big pension funds. And this is exactly what's needed. And then you can even think about creating a note to ask investors to buy notes from these funds. And these notes can be really tailored to the individual needs of investors, be it maturity or coupon or currency even. And then you have these 4 different sets of investors, which makes a fund really very flexible when it comes to raising capital. And it does offer an attractive risk-return profile. And what the Eco Business Fund has achieved, we started in 2014 in Latin America, and then it was so successful that we opened a second fund for Africa, Sub-Saharan Africa, which of course is on a other risk level, but still also Sub-Saharan Africa fund is performing. But let me come back to the Latin American one. It's really amazing, the figures. The fund has collected 200 million of public funding, which is really a lot, mostly coming from the German government, plus the EU, plus other like smaller foundations. And above that, about the same size of DFI money, a bit less. And then it really achieved to match this number of nearly 400 million with private investors. And then you have to think that the money is being handed out on a debt basis. Like mostly it's given to partner financial institutions that again use these credit lines to hand out loans to SMEs. So you have a double revolving structure because the fund revolves the credit lines to the banks and the banks use it on a revolving basis. And when you do the calculations, you come up with the factor of 15 times that the public money or public money has been leveraged, which I think is really an enormous amount. And all this is used to transform unsustainable production practice into nature positive productions, or at least nature neutral, I would need to say. Let me just perhaps name one other example, because we have so much impact fund knowledge here on the panel, which is a charitable foundation we started 3 years ago. It's the Legacy Landscape Fund, which is giving a panel or introduction tomorrow at 8 o'clock, so for all the early birds here. And this foundation seeks to build a permanent capital stock of $1 billion. And then from the returns of this capital stock, finance 30 conservation areas around the world with up to 1 million each year. And when filling this capital stock, I mean, you need a lot of money once, but then after it has achieved this capital stock of 1 billion, it really can operate on a self-sustaining manner. And I think these are really innovative ways to scale up money for biodiversity issues. Thank you.
Thank you so much, Alexandra. And I almost wish that the negotiators that are discussing the, funding structure of the GBF could hear you, because, the idea that you, with $1 of public finance, you can leverage 15 more of private finance. I think that's a breakthrough. So I want to come to you, Marta, also with a final question for you. Sil Ventures has experience in developing, but also closing projects. So we would want to have some of your experience and maybe also recommendations to those in the audience who are considering, setting up a similar fund or have a similar role as an asset manager. So could you share some of the lessons you have? And I'll give you the mic because we're sharing.
Yeah, thanks. Many lessons learned for us. I mean, we started in 2017, so we've got a few years. We're a few years in now. We've just revised our investment principles, etc., based on what we've learned in those 7 or so years that we're now underway. I think one recommendation, and it's mainly based on what we've learned here at COP this week, is to start by knowing what you want to achieve. So for us, that means deforestation-free supply chains, right? And from that end goal, we're working back set our targets, to develop a system that gets us to achieve those targets. I think it has been quite overwhelming for us here with all the new technology, the data that is out there, the policies, the frameworks, the standards. It's easy to get lost in the weeds if you're looking to start now, I think. So my recommendation would be to start with setting very clear targets for yourself in terms of nature positive. Where is your nature positive contribution, and what are the targets linked to that? So is that your conservation area? Is that species richness? Is that restoration, nature restoration? For us, that was a very clear sort of guidance in our process development and systems development. Also, to your question, what kind of data sets and data tools we wanted to use to get there. So what that looks like for us is we set targets on conservation, on restoration, on supply chain, NEPE compliance. And we've designed a process that, first of all, screens at a high level new investments for risk and biodiversity. We have a specialized forest and biodiversity framework that is designed specifically to do that screening. And based on the risk level in that screening, we know what kind of due diligence we need to implement at that particular investment, which gets us the information we need to ultimately create impact in that investment. So that screening has been instrumental for us to help understand what kind of an impact we can have in this investment and in the supply chain and in the landscape. And then once we've invested, obviously, we want to know how can we make sure that that is achieved? How can we monitor that? So that same framework helps us to continuously and annually monitor the impact that we realize, and also to steer, if needed, if that impact is not realized, to help steer in the right direction. I think another lesson learned for us was the value of all the publicly available data sets that we have now at a country level. So we're now developing country profiles that allows, before we even have an investment in sight, before we even look into a country, we already know a bit of a heat map on what are the main biodiversity risks that we look at in this country? What is the main physical climate risk profile? Where are the deforestation risks? What is the drivers of deforestation in this country? And that helps us in our origination. So which areas do we target for origination? We look at impact, so we look at those areas where the risks are. I can imagine other investors might have a different approach, but this is how we approach it. And then it helps us in the initial conversations with our clients as well, with our prospective clients, to know from the onset, what are the impacts that we would like you to achieve, and how can we work together with you to do that? That has been tremendously valuable for us, and we're looking to expand that country data set work with, like I said, physical climate risk, but also profiles on indigenous peoples, profiles on gender, for instance, in particular countries, on human rights risks, so that we have that information as we go into our investments. So those are just two recommendations, observations that we have learned over the past years.
Thank you so much, Marta. I want to come back to Frank, where we started. The over 1,000 IUCN members also include very many indigenous peoples organizations, and we know that in climate finance, only a marginal amount, less than 10%, reaches the local level. So how can we create locally led action, and how can indigenous peoples and local communities be both the beneficiary but also the partner in those type of developments?
Yeah, thank you very much. Maybe a very quick word on IUCN in general. IUCN is not an NGO. It's an international organization with, 1,500 members, of which in the order of 100 are national governments, and a very wide range of civil society organizations of other kinds, including indigenous peoples and local community groups. And the answer to the conundrum that we have in front of us about the loss of biodiversity around the world is that in order to dig ourselves out of this hole, we need a nature positive economy overall, and that the really crucial participants in that local based nature positive economy are local indigenous peoples and local communities. They are the ones who effectively have the means to deliver the kinds of reductions in impact drivers that we need in order to end up with a livable planet in 50 years' time. The problem is that we simply don't have the mechanisms to engage with that constituency to participate in this degree of economic open opportunity. I'm sure my colleagues here would agree that the fundamental problem that we have with these investment funds in countries around the world, I come straight from Madagascar, this is direct experience in the last few weeks, is that there's no pipeline. There's nowhere to put this money. There's vast amounts of investment funds out there with nowhere to go. You can put it in big agricultural projects or in infrastructure projects. That's relatively easy. You spend large amounts of money all at one go. But if you want to develop a locally driven, nature-positive economy, you have to interact with very large numbers of people. And that's really, really difficult for finance institutions to do. The really important need is 100 times more early stage funding for project developers, maybe 1,000 times more funding, and 1,000 times more instances of that funding flowing to small amounts of money going to people such that they can develop projects that are compatible with the delivery of a nature positive economy, but scattered across a very wide range of sectors and indigenous peoples and local communities in parts of the world where this money is just not flowing. There's no way it's getting to the point where it's needed at the moment. And I don't know what the solution to that is. It's a tremendous challenge for finance institutions. Even public finance institutions find this a big challenge because it requires such a lot of work, such a lot of transaction cost to get that money to flow to places where it's really needed. But that is the reality of the situation. Without that, we will not be able to create the natural nature-positive economy that we need in order to have a sustainable planet in 50 years' time.
Thank you so much, Frank. And with that said, this session is drawing to a close. My colleague Camille asked me to say that the plenary is starting at 5. That includes, among others, Lord Goldsmith and Carlos Manuel Rodriguez from the JEF. But I always have the feeling that events like this, we're very much focused on logos, on our heads, on rational thoughts, and less on mythos. So our stories in every culture, wherever we go, stories play an important role. So I want to close off the session with one sentence by Rainier Maria Rilke, who is an Austrian poet and writer. He lived about 100 years ago, and I think what he said is very inspirational for what we're doing today at COP15. And he said, the future enters into us in order to transform itself in us long before it happens. So for me, that means that the seed of change, the nature positive future, is already inside of us, transforming us. So I hope that transformation will bear fruit soon. And I want to thank you all for your attention. It's been a bit of a difficult room to do a session in. So thank you for bearing with us. And I hope you will join me in thanking all the speakers for their great remarks.